Hello guys, this is Soji and welcome to Soji Forex. Today we are looking at a market structure and we'll be looking at a bullish market structure which is an uptrend. So we'll be looking at how do we identify a bullish market structure. How do we know when a market is moving in an uptrend? Okay, and from our chart we can identify that a market is in an uptrend when the market is making a series of a higher high and a higher low. When the market is making a series of a higher high and a higher low, we say the market is in an uptrend. So let's look at this. The first, we begin with the identification of our low, which is this point. This zone here is our low. That zone is our low. So we begin by the identification of what? Of our low. So it begins the journey from this low and then it forms a high. So the journey of an uptrend always starts from a low point. You identify the low of the market, then to a high. Okay, it makes a high when we have a reversal, when the market pull back from that high to a certain level. So it moves from this low to a high and then it will make a higher low. It will come down and make a higher low. So why do we call this point a higher low? This particular level, this point now is a higher low because it is higher than the previous low. Though it is a low, but it is higher than the previous low. And then the market will go up to form another high. Okay, so we are not just going to identify this as a high. We are going to identify it as a higher high. Why? Because there is a previous high at this level, which means that this high now is not just a high, but it is now a high that is higher than this previous high. Okay, and for this high to be valid, it means that this high should be able to sweep the high of the previous one. Okay, and if you look at it carefully, you will see that this move up from this higher low was able to break the high, that is the previous high. Okay, and then from there the market will pull back to form another higher low. Okay, now for this higher low to be valid, it must be above the previous higher low. Okay, it must be above the previous higher low. Although this is a low, but this particular low is higher than this one. Okay, this is a low, but it is higher than this one. So you can see now that this low, if we should put a line from this bottom now to this place, you will identify that this one is actually higher. Okay, and then it form another higher high at this level. Okay, you'll be looking at this higher and say, is this higher high not the same as this one? No, it is not the same. Why do we say so? Because the body of the candle closes above this previous candle. So we are considering what? The closure of the candle body, okay, is higher than this previous one, and then it came down again. It makes another higher low, okay, and create another higher high. So this is how the market is formed. Okay, so the most important point, okay, of an uptrend is the higher low. The most important point of an uptrend is the higher low. This is what gives us an uptrend, because many of us, we are only concerned with how to draw our trend line. But now you look at this structure now. On this structure, it now gives us our trend. Okay, you see it? So when we join these lows together, this series of lows together is what will give us what? A trending market. That's what gives us the trend that we usually draw to identify our trend. You can see that, okay? You can see that. All right, and another important thing is that at the end of every point where it's making a higher high or a higher low, you realize that it will make a particular candlestick pattern. It will either make a bullish engulfing or a bearish engulfing or a hammer or a tweezer top or a tweezer bottom to establish that, okay, this is another level, okay, that has been established. So the market will be making what? A series of a higher high and a higher low. Okay, so if you look at this, the journey begins from here. Here we have what? A low which makes a high. Okay, and then from there we have a pullback into this region, and when it come here, it give us what? A higher low. Okay, first it begins with a low at this point to a high at this level, and then we come back to this point to make a higher low, and then we move to make a higher high. Maybe you'll be wondering now, from this level, how come the market got to this level and then it actually did not? Is this place not a high? No, it is not a high. Why do we say so? Because when this return, it actually take this low, but it never went below this low. Okay, so this is how to identify a typical uptrend, a bullish market, when your market is making a series of what? A higher high, a higher low, higher high, higher low, higher high, and what? And a higher low, a higher high and a higher low. Then we can say what? The market is in an uptrend. Okay, let's do that again. You can see it. It begins with a series of what? A higher high, a higher low, a higher high, and a higher low. So when we join our trend line, you'll see how perfect the trend line is. I believe you are getting value from this video. Please like and subscribe to this channel. Share with your loved ones. Okay, and don't forget that the most important point of an uptrend is the higher low. All right, so subsequently in the next video, we'll be looking at how do we identify a break of structure. How do we know when the market has changed from an uptrend to a downtrend?